Folks, we're back yet again. Glad we don't have that camera on because let me tell you, fresh from cutting the grass, I cut the heck out of that grass. Let me tell you, it looks nice. That yard's looking nice. And the weed eater, folks. I did it all. Let's talk about Ford today, reported earnings in the after hours, and actual positivity. It's been a rough year for Ford, down 31%. Prior to this, nearly 32%. So it's good to see that they're able to source some recovery from their high point, really over 40% down. I mean, this has been a rough time period for Ford stock. Let's look at these earnings and see why it shows a little bit of positivity. At first, it popped quite nicely, over 3% up. Let me just preface this by saying I'm shocked, folks. I would have bet money that this was not going to be a positive quarter for them. I would have bet this was going to be a stinker. They always disappoint me on earnings. They always do. Trust me, Ford always does it. And I'm shocked they didn't this time. So much so that, look, folks, someone may have played a short-term put option that might not be coming true at this rate, unfortunately. As you see, a 1.5 gain after hours. That 1450 put might not work out in my favor, but it does expire next week, folks. So there's a chance. Let's bring this stock down. So where's the positivity here? Let us take a look. What? So non-GAAP EPS of 38 cents beats by 1 cent. That's on a non-GAAP basis. I care more about the GAAP basis. Revenue was down, but it was expected to be down. Down 4.7%. They beat by $2.79 billion off of their estimate. That's massive for Ford. They don't do that. Came in at $34.5 billion. That's not something Ford does. So it's kind of a shocker to see that. Wholesale shipments nearly 970,000 vehicles down. 970,000, down 9% from a year ago. That's a negative point, obviously, but it's way better than what was expected. So very much good to see that. From Ford's CFO, saying there's strong demand and pricing environment for existing and new vehicles to support the company, maintaining its full-year outlook. That's right. I thought they were going to even cut the outlook, but they didn't adjust it. They kept the outlook. Full-year vehicle volumes increasing 10 to 15% from 2021. Kind of shocked. I can't lie to you. I personally did not think this was going to be a thing from Ford. I thought we'd see a negative guidance number here. I thought it was going to be declined. So, all things considered, I'm pretty happy for them. Now, there is some negativity that you can consider when we talk about potential recessionary environments. Obviously, not going to be a fantastic thing when you're talking about new car sales, but they seem to be pretty confident. So, let's look at the press release and see what else we can find. No, folks, this is nasty. Net loss of $3.1 billion. You're gonna point that out to me right now? Holy cowsers! You're not even gonna let it simmer in just a little bit? $3.1 billion of net loss? Freak. They say primarily attributed to the valuation of investment in Rivian, which has been schmammered this year so far. Schmammered. So, scaling of high-demand EVs is on track to 600,000 units by late 2023. Obviously, this is a massive thing for them because you talk about the E-Transit, which I think is going to be a massive vehicle for them, which is why I'm in Ford stock personally. You talk about potentially the first mass-produced electric van that they could be making here with the E-Transit, and obviously Ford F-150 Lightning. The best-selling truck in America, the F-150, now has an electric version, and let me tell you, the backup orders are going crazy. They are placing orders like crazy. They had to stop taking orders because they got so many. Transformative Plus, Ford Plus plan includes creating distinct auto business units. There's the Ford Model E for EVs, Ford Blue for the internal combustion vehicles, so your traditional ICs, Ford Blue. And Ford Pro is for commercial customers. So interesting to see that, right? Different segments, how they're doing that. So interesting Ford Model E. I don't know why they're calling it that, but I guess electric. I don't know. Why is the E not capitalized? Whoever made this, folks, look, you got to capitalize that E there. If you need an investor relations person for it, I'm willing to step up and take the duties. I really am. And yes, I did say duties. I will not take your duties, but I will take the job requirements, at least. I will perform the job functions, the essential job functions. I'll do it. And we saw the guidance reaffirmed. Interesting to see. Yeah, we'll see what that looks like. Strong customer demand, as they mentioned. If you look at market share, they actually lost 0.6 basis points here on the market share. 6 basis points down, 0.6% less market share. Wholesale units fell 9%, as we saw on that before. Revenue shrank 5% year over year. We saw that, obviously. Net income was down massively, $6.4 billion. And look, and this was part of my thesis for thinking this was going to be a stinker of a quarter. I thought, given this profitability nightmare, this stock would be schmammered even harder. Because Rivian, look, this thing, it's been a terrible investment for them in terms of dollar value right now, because the thing's just falling like crazy. So yeah, kind of shocked. Down $6.4 billion year over year in net income. So that's kind of where I'm at with this. I'm netting. I mean, negative 78. Look, folks, I can't explain why this stock is going up. I can't explain it. I know the revenue line was so significant, but I think the market is just out to screw me. I think it really is. I anticipated this horrible quarter, and guess what happened? The market says, screw you. We've been nothing but negative, and now, all of a sudden, we're not negative. Sorry, I don't mean to raise my voice, but some of us may have lost some money, okay? We get upset when we lose some money. Again, they committed to at least 600,000 vehicles, electric vehicles, the capacity at least, by the end of 2023. Interesting. For ramping up battery supplies, on the way to make more than 2 million EVs annually by the end of 2026. Now, the concern with that, I understand where they're coming from, but I just don't think this is a feasible number. We've already talked about lithium being a precious metal that is not renewable, folks. It's not. This is going to be an impact when all of these electric vehicle companies get into the game. We're not necessarily going to have all the lithium in the world to pick from, folks. It's not going to be tough. You're going to be destroying ecosystems and landscapes for electric vehicles that are supposed to save the environment. It's so crazy how hypocritical these people are. They don't have a clue what they're doing. The electric vehicle's not saving the environment. In fact, you're absolutely destroying ecosystems with lithium mining. Just look at the side effects of lithium mining, folks. See what it looks like after that's been done, after we've mined for lithium. Let me just tell you, that's not good for the environment, folks. But anyways, we're on to this. Also, we still are using oil and gasoline to fuel this electricity. Just saying. Otherwise, we can't provide our own electricity from clean energy right now, unless we went to nuclear. But look, that's another point. My argument against electric vehicles is there. Just want you to put that out. If you have common sense, you might understand this, but some people don't look deeper than what the people tell you. You got to look in. Open the third eye, as they say. Is that a thing? I don't think I'm allowed to talk about my third eye on. At least my camera's not on, so I can't show you my third eye. There's not a lot to show there, folks. But okay, let's go on to this. Oh gosh, look at this net loss line. This is a loss of $5.4 billion on the investment in Rivian. This isn't going to look greater in the next quarter either, so I want you to consider this. This next quarter is going to be also in a rough spot when you look at that. It still shows overall, I mean, that's rough. You take away that, and you're still below last year, obviously, right, by about $1 billion, but by over $1 billion, I should say. But it's just, I don't know. I don't know what to say there. I don't know what you want me to say. We look at market share in terms of segment. Shrank in North America. South America shrank 1.4 percentage points. Pretty rough there. Europe down 0.5. China, pretty flat there. And IMG here, down 0.5. IMG. Why can't I? Come on, brain. Use your head. But total auto, obviously, as you saw, down 0.6. IMG. Let me see what that is. Let me see what the segment. IMG customers in the IMG countries. Look, folks, I haven't seen this from them. I don't know. Obviously, this doesn't include Africa's not included in these. The rest of Asia as well. So I guess that's a thing too. But that's just weird. I don't know what that means. In North America, Ford generated 1.6 billion of EBIT. Nice. That's a lot of money, and that's the only place where they really did that. China, they lost money there. But they were still down $1.3 billion over the year prior. Again, folks, I'm shocked right now. Margin down 5.7, 4.2 overall. I'm just kind of shocked that this stock is up right now. I hate to say it, and I love me some Ford stock, and I'm a shareholder. You know, we own over 100 shares of this stock, over 150 right now actually. But just shocked. Ford in Europe generated positive EBIT despite supply-related lower volumes. Okay, the company staying 7-year standing as the #1 brand of commercial vehicles. Again, this is why I said the E-Transit is going to be massive, especially when you look at Europe. This is a massive aspect for them. I think it's a really big way that they can contribute. When you look at the Ford Pro segment, I guess that's what it's going to be. Ford's really focused on the Lincoln brand in China. Obviously, we talked about that. It's been kind of a piece of garbage, though, all things considered. Yeah, it's not been good for them. So obviously, the Ford Plus plan, as they talked about, we just saw that, how they're splitting up these segments. It's interesting. I mean, I get it. Yeah, I mean that's good to see. They're announcing priorities and sticking to them, so you can see which segments fail and which don't. So very exciting to see. This week they're formally launching the F-150 Lightning, folks. That's right. This is exciting. They're introducing the Lincoln Star concept, a glimpse of the design language that will characterize fully electric vehicles for the Lincoln brand. I'm going to click on this. I want to see I'm going to see this vehicle. Folks, let me just watch this real quick. Don't want it to be too loud for you. We'll turn it down a little bit. I didn't know on this Star. Oh, look at the Lincoln logo, folks. What is that? What is that, folks? What is that? What am I looking at? It's a spaceship. What is it? Oh, you know what? I gotta be clear with you. This looks pretty sleek. Okay, I'm buying in. I'm in, folks. Show me that interior. Screens on the back of the seats. LED lights in. Whoa! Sheesh! That thing looks pretty good. Let's get back to what we were on, though. That's exciting, folks. That's actually a pretty interesting looking vehicle. I'll give them that. I will give them that. We're zooming back in. Oh, yeah, baby. The first E-Transit produced in Turkey. Let's go. I am going to say we're now going to look. Look at this. Look at the wrist. Look at the wrist. We're gonna look at the balance sheet. That's what we do before we talk about the stock. Right now, oh baby, 3 months comparison. $106 billion of total current assets compared to 108.9. This is a consistent thing we're seeing with all companies right now. A lot of companies bolstered that cash position last year, and we're seeing it dwindle to an extent this year. Marketable securities shrank pretty massively, and again, I think we know what that's from. Rivian. We know it. Total assets in general at 252.9 compared to 257. Most of that decline, obviously, we see $2 billion of it from the total current assets line, but other than that, kind of a decline in really every segment here. So nothing crazy there, just not too crazy. You'd like to see liability shrink as well, but we will see what that looks like. Total current liability is at $90.7 billion compared to $90.3. Slight shrinkage, not nearly as much as they really shrank the assets from. And from a liability standpoint, 208.4 compared to 207.9. That was just a difference in the total current assets, basically. So nothing really has changed there. Long-term debt, look at this line. Not bad. I mean, long-term debt, $17 billion. Really, again, Ford Credit obviously is a massive part of that, but that's not something I consider. Right? We consider the actual company debt at $17 billion, but that puts it at a shareholder equity has shrank in the last 3 months by $3 billion, $3.5 billion. Was 48.6, now at 45. What do I think of Ford stock? Let's be clear with each other. This stock is trading at a dirt cheap rate, right? Now, the P ratio is going to get effed by this quarter and next quarter. It's going to be absolutely destroyed. But it is a company making, right now, trading at a price to sales. I mean, shoot, this thing's like a point 0.4 price to sales right now. This thing is dirt cheap, right? And the P ratio was sitting at 3, obviously going to be quite higher given this horrific quarter. But that's not kind of a shocker. I don't know if profitability is as big of a focus on people's minds, which is kind of why you're seeing the stock go up, as electric vehicles are. But it is rough out here, folks. This stock is trading dirt cheap, worth a buy still, in my opinion. I like this one when we're talking about 5 to 10 years down the road. I love it. Bye.